Hello, I'm Bernard Hickey from interest.co.nz and welcome to the Roost Home Loan Affordability Report for July, which shows home loan affordability in New Zealand at the best levels since September 2003. If you can remember back that far, that was the last time the World Cup was held in this part of the world. We all remember that Carlos Spencer pass intercepted by Sterling Mortlock. But home loan affordability the best also since the price boom. Because house prices are lower, the median house price fell quite substantially in July from June, and we're seeing record low interest rates, and many people expect them to stay lower for longer. Also, over the last 4 or 5 years, we've seen incomes rise, but house prices haven't risen. House prices are still below their levels in 2007, and over that time, inflation has helped affordability catch up. There are some regional differences though. Auckland, Queenstown and Wellington remain tough for those people on single incomes. But the smaller provincial towns, Whanganui, Invercargill, Gisborne, doing very well, and we've seen some real improvements in the last couple of months. Whangarei, for example, a big improvement in home loan affordability. Also some improvements in Auckland Central, South Auckland, Tauranga, Whangarei and Queenstown. But we have seen affordability worsen in Christchurch, Otago and Invercargill as house prices have risen there, in part because of the earthquake. Now looking ahead, interest rates are expected to stay lower for longer. Up until a few weeks ago, economists were saying the official cash rate, and therefore floating mortgage rates, would rise on September the 15th. But since then we've seen all this turmoil in global markets, which mean that people expect lower global economic growth, and therefore not so much of a need for the Reserve Bank to put the official cash rate back up again in a hurry. Most people see the official cash rate increased in December, so we've got another 4 or 5 months of rates being on hold. But we all don't know what's going to happen in the next couple of months with international markets and the global housing market. Also, weak building consents in New Zealand mean that supply is going to be constrained, and certainly in those markets where supply is constrained, house prices remain relatively robust. Now let's look at the numbers for the Roost Home Loan Affordability Report for July. Just to give you an idea of how we come up with these numbers, this works out the cost of a single median income to afford an 80% home loan on a median house price. And that shows that in July that number was 50.2%. That's how much of your income you need to service the mortgage on an 80% mortgage on a median house. That's down from 52% in June and well down from the peak of 83.4% in 2007. But obviously many people are in a household. There's a couple of incomes, and when you look at first home buyer household affordability, so that's 2 median incomes for young people buying a first quartile house, that's down at 20.5% of your income needed to service that mortgage, down from 21% in June and nearly 35% in late 2007. So there we have it, home loan affordability at its best levels since September 2003. That was the Roost Home Loan Affordability Report for July. I'm Bernard Hickey for interest.co.nz.